Over the past 6 months, there's been an unprecedented amount of anticipation for one of the biggest events to happen in crypto. Between news articles and billboards, everyone was talking about the Bitcoin halving. But the problem is, even though us as experienced investors anticipated that we would get a sell-off, a lot of new investors piled in anticipation, and since then, Bitcoin has dropped nearly 15% at its lows, and the overall sentiment is getting destroyed. But if I've learned anything from making a tremendous amount of money in crypto over the past several years, it's that when sentiment is bad, this is exactly where the best opportunities lie to be able to make those life-changing investments. So in this video, I'm going to explain why Bitcoin is dumping and why it really doesn't matter that much at all. I'm going to explain in detail why I think the real opportunity is yet to come. Then I'm going to go over my preparation game plan and talk about some of the projects that I believe could be sleeping giants for this next cycle that can allow us to make those tremendous gains. So if that sounds good, make sure you hit the like button on the video, subscribe to the channel if you like trading and investing. Check us out on Instagram, Discord, and TikTok. We have an amazing trading and investing community. But let's first talk about why we've actually seen a sell-off in Bitcoin. It's not uncommon for us to see a significant run up leading into the Bitcoin halving, because common sense would lead us to believe that if we see the mining rewards get cut in half, we're also going to see the available supply of Bitcoin drop significantly, which from a simple economic standpoint would mean that there's a high chance that the price will increase. In addition to a tremendous amount of institutional money entering the market, to most investors, it only seems intuitive that Bitcoin absolutely skyrockets from here. But as us experienced investors, and as I've been talking about in all of the previous videos, I want to show you a few reasons why this is normal and explain to you why this isn't as big a deal as a lot of people think it is. First and biggest reason is because even though we all like to think that Bitcoin is a tremendous store of value and that cryptocurrency is being adopted, cryptocurrency is still viewed as a risk-on asset, similar to something like a stock. And the things that control the stock market primarily are the monetary policy decisions from the federal government, especially interest rates. So because stocks and bonds have an inverse correlation, when there's an expectation for interest rates to drop, stocks will oftentimes price in that anticipation and go on an extreme run. And we've seen that over the past 6 months with even the Dow Jones, which tracks the 12 largest industrial stocks in the US stock market, has increased around 12%. Okay, because the federal government was anticipating between 3 to 5 rate cuts into the next year. So leading into our halving event and leading into those expected rate cuts, that's why Bitcoin started tearing up as well. And before 2021, Bitcoin never really scaled based on the interest rate decisions until we saw the pandemic. Okay, during COVID, because the government cut the rates to zero and started injecting a tremendous amount of money into the system, fixed income that is normally lucrative with very high interest rates became absolutely worthless, and then all the money piled into the stock market as well as Bitcoin as a hedge on inflation for the US dollar. And you can see, right as the interest rates started increasing again, this is exactly where we also saw the price of Bitcoin sell off from its 2021 all-time highs. And now most people are saying that there's only going to be about 2 interest rate cuts in 2024. So that definitely put a damper not only on stocks, but correspondingly on the overall crypto market. But right now, considering that the debt to GDP ratio is at the highest we've ever seen it, at a certain point, we're going to have to drop the interest rates. And depending on when this does happen, is probably going to align perfectly with where we expect cryptocurrency to continue breaking highs and proceed with the bull market. But this is honestly probably one of the primary drivers as to what actually kicked off the beginning of large-scale cryptocurrency adoption. All right, not to mention, we've seen this in previous cycles. So for example, 6 months before the 2012 cycle, okay, we saw this sort of plateau price with the price barely doing anything for probably about a month or two before we started to see the increase in price. Then in the 2016 cycle, for several months, we actually saw negative growth down here about halfway through the cycle, the all-time highs. And then in the 2020 cycle, we saw a lot of sideways price action and even a few sell-offs before once again seeing that massive run-up in price action. So once again, let's not forget that over the past year, Bitcoin's basically moved up around 400%. We're only down about 15% from all-time highs. Okay, nothing fundamentally that initially drove this move in Bitcoin has changed whatsoever. The only thing that has changed is that it's less exciting, and since we're unsure about the interest rate decision, things might take a little bit longer than a lot of people were expecting, and people like to chase the shiny object. But the thing that is different about this cycle is the amount of institutional participation that we're actually seeing in the market. Whereas in previous cycles, once the hype dies off, we really needed a lot of retail holders to be able to gain interest again for large money to be able to play off of that and push the narrative. Okay, at this point, a lot more investors feel a lot more more safe holding Bitcoin long term. So a lot of people, if they see the price of Bitcoin sell off significantly, especially knowing what's happened in all of the previous cycles, are more likely to buy up the supply as it drops, which is typically what happens with any maturing asset or market. As there's more capital in it, the volatility tends to drop because more people believe in the long-term value of it, which has led to the capital entering the market in the first place. Okay, so if we are to see a continuation of this sell-off, okay, it's probably not going to last all that long. And when it does flip around, it's going to present a plethora of whole new opportunities for us in the altcoin market to be able to find those gems and be able to trade them up. And there's a mindset that I've learned from trading and investing over the years that really helped me, and it's important to understand. If you use your regular real life logic to try to invest, you're almost always going to get in at the wrong time, because when people are the most hyped about things in regular life, it's usually because it's so popular that everybody's getting involved, and then you can just sort of follow suit and follow that trend. But with investing, the more people talk about it and the more excitement there is, the nearer you are to the end of the opportunity, because it's called investing for a reason. You're supposed to get into things before they're successful, so you have to be willing to be called crazy and to feel stupid when you're taking these actions, so that you're looking to sell when other people are excited and asking you to buy. Okay, people were concerned about me calling me stupid when I bought Bitcoin at 12.5, and then when it was at $50,000 and $60,000, people were asking to meet with me, show them how to buy their Bitcoin and set up their portfolios. And at that point, now I was worried about them. Okay, a good example of this is last summer, I made a video talking about the potential of Bitcoin when the price was still in the low 20s, talking about the inevitable break of all-time highs as the ETFs were expected to be approved. Okay, if we're making 100% move to the upside while no one's paying attention to Bitcoin, imagine what happens when ETFs do get passed by the SEC. Banks start flooding into the space to push this back up, and in my opinion, well above all-time highs once again. And I think that video got like 15 to 20,000 views. Now, when Bitcoin was near all-time highs, if I drop a crypto video, the views will often be in the hundreds of thousands, even though the information that I was giving way long ago was actually probably more valuable than the information now. Okay, and this shows you just because a lot of people are interested at a certain time doesn't make the information more valuable. Okay, so right now, the more the markets can die off and people start to forget about it, the better opportunity for us in the plays that I'm going to be talking about in just a second. The thing that we have to not forget though is where we're going in Bitcoin. If we look at Bitcoin and move it to a logarithmic scale, and we also take the time scale and make it logarithmic, Bitcoin actually follows these same exact lows. Okay, there's all sorts of noise and confusion, but if you just look at the data, Bitcoin actually follows the same exact cycle every single time. So we know the model that's been right for the past 15 years just has to continue, and this is going to get us to that $165,000, $175,000 Bitcoin, potentially this cycle that we've been talking about since November. Like I said, if we make the time scale and the price scale in a logarithmic view, Bitcoin just trends along this lower line the entire time up. So even if we have the worst cycle of all time, and say we just very gradually trade along this green line the whole entire time for the next couple years, this is still going to put us at $100,000 Bitcoin in like 3 or 4 years from now. And say we go out to 2034, where we're barely off of this lower line here, we're still looking at a $500,000 Bitcoin in the next 10 years, which just off of the price alone from here is about a 10x on a large cap asset. So we know where we're going with Bitcoin, and we can very simply time cycles and then use the momentum in the smaller projects to be able to absolutely exponentially grow our portfolios. Okay, I made a ton of videos about this. In particular, I made a how to scale your portfolio from $1,000 to $100,000. In all seriousness, I'm going to link that here, as well as below I'll have a Notion where I'm going to share with you all of the projects that I'm interested in. I'm also going to go over them here, but you'll have them in the description as well. But you're literally watching an emerging market happen right in front of your eyes. And if you're able to have this poise and have this foresight, we can make generational wealth for ourselves. That's what motivates me every day to make these videos. And that's why I'm doing all this research and sharing this with you guys. So that being said, let's get into how to prepare for the upcoming cycle, whether it happens tomorrow, whether it happens 6 months from now, a year from now. Okay, we need a game plan, and there's certain projects that are going to fit fit the narrative right now that I have my eye on, and that I'm going to explain exactly why. So my thesis going into the next cycle has always been pretty simple. Get exposure now and early so that we're not relying fully on timing the cycle, but instead of aping into things fully, save some capital on the side, knowing it can take about a year before we start to see the market going. I've been watching and setting up plays that haven't even listed yet so that they can list when the market's potentially at a drawdown, so that we can get positioned when no one is even paying attention and no one's chasing those launches, to be able to ride the wave all the way up. Okay, because once we're positioned in a few more things here, we can essentially relax while everyone's fighting over the scraps, and then we can use our simple market exit strategy that I'll explain quickly at the end of this video to be able to close out all of our positions. And this is exactly how cycle investing should be once you're actually timing things properly. All right, so let's talk about some narratives and some things that are going to lead us into some of the plays that we're interested in for this market cycle. So even though the market is sort of cooling off in general, we're still seeing a tremendous amount of hype in meme tokens, which is one of the primary drivers for this major move that we called up in Solana earlier in November, but is also now translating over into a ton of other chains. Okay, we just recently saw GameStop and GME launch again. Okay, meme investing culture is one of the biggest movements we've seen, and that we will likely continue to see on an even crazier scale into this next crypto cycle. Okay, that being considered, the easier it gets to do this, not needing to know all of the details about Web3, the more retail participation that we're going to see in the investing space, in the meme token culture, driving a tremendous unseen amount of capital into the cryptocurrency markets. If we look at something called the total 3, this is the total market cap that is in cryptocurrency, excluding Bitcoin and Ethereum. You can see from the past cycle high, we had about $1.2 trillion worth of capital in the altcoin space, excluding Ethereum and Bitcoin. Even though Bitcoin is now at all-time highs again, we haven't even come nearly close to the altcoin market cap reaching the all-time high. So this means that this is probably a delayed reaction, in which case when we do see a break of this high and then a follow through similar to what we saw here in the altcoin space, there's a good chance that we'll see $1.5 to $2 trillion worth of capital flowing in outside of Bitcoin and Ethereum participation, which, you guessed it, probably is going to take place largely in the meme space. Sure, there's going to be a lot of good projects, quality projects that money is also going into, okay, but that's also going to play into this narrative. All right, and leading this charge, Coinbase is essentially the gold standard regulated exchange in the US with a tremendous amount of global users. Coinbase is one of the largest cryptocurrency exchanges in general. And even though altcoins on Ethereum were fairly popular, you still need to know Web3, which now Coinbase is eliminating with their creation of something called Base. All right, and essentially what Base does is it allows Ethereum to be leveraged, but it allows it to be a lot more user-friendly for all sorts of applications to be built with the security of Ethereum, but is 10 times cheaper than actually using Ethereum. One of the biggest issues with people using Ethereum, which was also largely why Solana caught traction, was because the gas fees on Ethereum were so expensive, it sort of didn't make sense to use it. Whereas now Ethereum can be leveraged with, you can see, no code changes needed. So all of the code tools and infrastructure that would normally work with Ethereum will work seamlessly on Base, which in my opinion is going to allow a tremendously wide base of users who are familiar, who trust Coinbase, to be able to enter the market on the altcoin space, which could be one of the most insane plays of this upcoming bull cycle. Now, if there was the possibility for me to buy the Base token, I think this would be a no-brainer quality investment over the next cycle. Even though there is speculation that there could potentially be an airdrop for using Base, which will be awesome if Base users are able to get a token if there ends up being a token. Okay, it's purely speculation with no guarantee that Base will actually do an airdrop or actually have a token. Okay, after doing some research as to whether or not they were bluffing or telling the truth, okay, Jesse Pollock, which is the head of the Base protocol, made it clear that Base would not issue a token and had no plans to issue a token at all. In order to invest in Base, I thought of the next best thing. So Binance Smart Chain was Binance's version essentially of Base in the previous cycle, okay, where you can see during the beginning of the cycle, the TVL, or the total value locked, was here around 400 million and went as high as $21 billion in total value locked on Binance Smart Chain because of how popular what's called BEP20 tokens were when people were making all sorts of altcoins and trading them on Binance Smart Chain. And correspondingly, the primary and basically largest liquidity provider, which essentially provided the capital to facilitate the trading on Binance Smart Chain, was PancakeSwap, which at the same time started to pick up traction around $200 to $400 million million market cap, and at the high of the cycle went up to about a $6.6 billion market cap and went from about $2 all the way up to 40 and did right around a 20 to 25x. So then I dug deeper to figure out that the pancake swap version for potentially a Goliath version of Binance Smart Chain on Coinbase with a bunch of general users looking to get involved into cryptocurrency was a project called Arrow. And you can see right now, Base only has a $1.45 billion amount of total value locked, which is nothing compared to the $21 billion worth of TVL on Binance Smart Chain, which in my opinion, with so much more money entering the market, could even well exceed that amount of TVL. And right now, Arrow is only trading at around a $400 million market cap, which if we look equivalently to PancakeSwap would put us right around here on a potentially even larger parabolic move as we see mainstream adoption in cryptocurrency with the use of Coinbase. And you can see after this, the price of PancakeSwap never really recovered, but this is because there was a lot of liquidity providers that ended up popping out of the woodwork, and they were even around as PancakeSwap was around. Okay, right now, Arrow is the primary, basically the only liquidity marketplace for Base protocol right now. So even if Arrow isn't the only one long term, for the next foreseeable future, Arrow is essentially the only one providing liquidity to this potentially massive chain, which is already starting to gain a tremendous amount of traction. All right, so I'm going to walk you through my analysis on Arrow and show you why it lined up perfectly. And I'm going to show you where I just entered actually today on the day of shooting this video. Okay, I have tons of videos explaining this process. I'll put out a card at the end of this video that I use when I'm day trading to generate regular profits during the day when I'm taking regular trades, but just follow along for now. So when I analyze trends, I look in a 5-wave pattern. So starting at the first big push up here, correction, second big push up as wave 3, down for a second corrective wave with a final push of our wave 5. Now we can use something called a trend-based fib extension. All right, if you follow the channel regularly, you know we use these all the time. This basically takes the golden Fibonacci ratio, which is a pattern found in nature, to allow us to project potential tops of markets. Just to show you simply how this works, if we go to our previous Bitcoin cycle where we have our 1, 2, 3, 4, 5, you take that same tool, click at the bottom of this trend up to our high point there, back down, and you can see this 161.8 value gave us the perfect top of Bitcoin before an ABC correction all the way down to this 61.8 ratio, which is the golden ratio in Fibonacci. Okay, you'll also notice if we take that same trend-based fib extension tool and we click from our A, B wave down to C, which is the low of a correction on a trend. If we click from the high of B down to A, back to B, you'll see this exact low point touched on this 261.8 value before making a correction back up. All right, so now if we take a look at Arrow and we start from our low point here up to our highest point there and back down, you'll notice, with exception to this one little wick here, this is the exact top before we got our sell-off in the market. Okay, you'll notice if we take a Fibonacci retracement off of this low up to the consolidation point here at our high, not the exact high, you'll see this is exactly where the price came down to and took our original bounce, and now we're starting to retest those levels. If we consider this our A with this our B and this point our C, you'll notice that the price also came right into the region of this 261.8 area, and this is exactly where the price consolidated. Okay, so even if we do get a sell-off down to this region, this just listed on Coinbase as the main liquidity provider for potentially one of the biggest chains in the upcoming cycle. And if we scroll out of this and consider this R1 down to 2, 3, 4, 5, okay, and we click on our projection from here to here, that would put our 261.8 target at about $5.50, which just even off of this wouldn't be that much money into the protocol and would already give you nearly a 6x. And if you can catch it even lower, it could be closer to around a 10 to 15x. So actually today I got out of some of the older projects like LivePeer, Link, Atom to rotate into this front runner that is a fresh project that is very relevant into the next cycle. And right now sitting at around a $400 million valuation compared to the growth of PancakeSwap could put us at a $7 to $10 billion valuation, once again giving us anywhere from 10 to a potential 25x gains on this protocol. Of course, things can change. This is an optimistic view, but I firmly believe this will be a relevant play moving into the next cycle. Okay, IronNet is the next project that I want to talk about. What excites me about IronNet is it's sort of a centralized investment around the craze for GPUs, which I think will continue to see a use case and a need as AI continues to develop. Okay, this project essentially allows you to link up your devices to be able to contribute your your GPU and allow smaller startup companies where normally all of this computational power is extremely expensive to find this at a faster rate and for a lot cheaper, allowing the user to be rewarded. And this is essentially being powered and funded by the Solana network, by Aptos, and by Render, which is one of the largest companies in this entire space. And what's interesting about IONET is they're going to be launching in a market where a lot of these projects already cooled off. So it's not going to be an overhyped launch. And the estimates for the compute requirements globally are expected to increase by 10x every 18 months for the foreseeable future, which is going to make stuff like this even more important. And I see this as an interesting investment opportunity that could potentially be a Goliath in the space. Okay, you have Near Protocol that started at a couple $100 million market cap and went into the over 5 billions. You have Render that started off at 12 million and went up to 4.2 billion, as well as Tau, which is one of the ones that we called extremely early, went up to as high as I think $4.2 billion in market cap. Okay, IONET's expected to list around a $500 billion market cap, at least the last that I've heard, in which case, if it's a front runner with these contenders in the bull market, peak bull, we could realistically see $10 to $25 billion in market cap if we do see the sector blow up, which would give us an extremely nice opportunity to make significant returns on this investment. Okay, they recently pushed back their launch, which was expected to already have happened somewhere in April. Overall, I see this as one of the most exciting GPU/AI investments over the next cycle that is launching at a really perfect time in the market, hopefully being able to get a little bit of a sell-off after launch and be able to position yourself into this next cycle to play that AI craze. All right, we're also watching a few of these other projects that if we do continue to see the market sell off are going to launch when the waters are quiet, which is going to be absolutely epic. I'll make sure that I keep you guys posted on that. All right, and for these projects, I put all dip buy levels in my analysis into our Discord channel under long-term analysis. The link is in the description for the Discord. It's completely free to join, and you can check out all of the analysis that I share with you guys to be on top of all of these other projects. Okay, I covered them in previous videos as well, so you can give those a watch if you want a little bit more detail on some of these. All right, another project that just launched that is also interesting to me is a layer 2 project called Mode. And the reason this is exciting to me is because a lot of times what will happen is in crypto cycles, the new chains are sort of in uncharted territory. And Optimism, which launched during the bear market in 2023, built a super chain that gave a $6 million grant to OP, which reminds me of a project. A lot of times when these smaller protocols get funding by the main chain and those main chains start to really succeed, you see a follow through with some of the fundamental essential layer 2 protocols on top of these chains. Okay, another company that got funding from the Solana Foundation actually was a company that we were invested in and partnered with a few years ago. Okay, Nosana, big shout out, was able to make ridiculous amounts of gains this year. Okay, once again, funded by the Solana Foundation. And the point of Mode is to build economic systems on top of current chains, which makes it a modular project. It can be moved onto any individual chain. So Mode is essentially a layer 2 that sort of uses game theory to have people continue to build this into perpetuity. Okay, in the short term, Mode will build on the OP stack with Celestia, another reason why we like Celestia. In the medium to long term, Mode will focus on developing open source technology that contributes to the OP stack that will explore new partnerships to power the stack. And you can see Mode just launched in the beginning of May, and we're sitting right around a $50 million market cap. If we are to see any decent success with Mode, we could potentially get a $1 to $2 billion market cap, which could give us a really solid potential. Once again, obviously this is going to depend largely on how the market moves and how OP itself does. All right, in previous video, I talked about portfolio allocation and potentials of projects in those portfolios. You can get access to this Notion sheet for free. It's in the description, which will go over my entire strategy for the bull market, all the strategies for timing the tops and bottoms of cycles. Okay, and once again, I'll be adding and removing projects that I like and that I'm watching, so you can also do your own research and know some of the projects that we're following along with here in our community. All right, you can see one of the things in here sort of highlighted one of my strategies to be able to exit Bitcoin even at this point in the cycle should put us right to our expectations of this upcoming bull run to provide the amazing opportunities in all of these tokens if we have the right patience and if we're able to accumulate during times when everyone is panicking and fear selling. All right, so I hope you found some value in this video. If you're still here, make sure you hit the like button on the video, subscribe to the channel if you like trading and investing, if you want to be updated when major opportunities are happening in the market. Check out our Discord. Another thing that I'm doing, okay, when I'm not investing in crypto, I'm day trading cryptocurrencies to be able to generate regular profits regardless of the direction that the market is going in. Okay, we give tons of resources about this for free in our Discord as well as the investing stuff, so make sure you check out out the resources in the description. Check us out on Instagram and TikTok as well. But until next time, I will see you all in the next video.